Hello, everyone, and welcome to eBizChat, where it's all about business. This is our brand new show. This is our first episode. My name is Rick Zanotti, and I am joined by my good friend and co-host, Dr. Susan Nash. Now, you may wonder, wait a minute, didn't you guys just do a show called Life Edge at the same time with the same two of you? We did, but this is now a parallel universe, and we changed the name of a show, if you will. It's a different show. We're really focused on business and entrepreneurs and all things having to do with business. And today we have one of our favorite people on in the world, and that is Dr. Ed Stuart. He's a very well-renowned economist. He's a professor. He specializes in things like Russian economics from the Soviet days on, knows a lot about China, and we're going to have a fun talk with him today. And in studio, we've got Harold Muliati. He's our video producer. He will be a disembodied voice today if you do hear him later on. He's not on camera today. But Susan, welcome to our new show.
I'm so excited about this new show, and I think that the timing is perfect because I was hearing in a meeting yesterday, 2020 was about survive, and 2021 is revive, and 2022 will be thrive. So thinking of that, that's all positive. But now we can think of ways to get there.
Yeah, that's true. Well, here we go. More and more people are working remotely every day. Your company may already be remote. You may be new to working remotely, whether you're a worker or a manager. Working remotely has some challenges and some very good points to it as well. In our training, we'll make sure that you learn how to work remotely, how to build trust, how to do all the things that make remote working successful. And we'll also talk about some of the pitfalls and what to avoid. Working remotely for workers and managers. It's our new course on Udemy. Thanks. This show is sponsored by Relate Corporation. Digital learning development, media development, corporate video, management consulting, and more. Visit us at www.relate.com. Thanks. And we are back, and in our central position of power, some things never change. We've got Dr. Ed Stuart. Ed, how are you today?
Great. Good afternoon, Rick. Happy for this opportunity, and pleased that you've started on this business venture. And I think, along with Susan, I agree that 2021 will be much more about economics. Obviously, we'll still be discussing pandemic issues and so forth, but I think the tide is slowly turning, and it's time to talk about business.
Yeah, and it's interesting because you've seen it all. You've been an economist for a long time. You've traveled to many different countries. I know you analyzed very well how Russia was, the Soviet economy, as well as their current economy. There's a lot of talk right now. I've been watching a podcast called The Economist, which is pretty much anything like making you want to cut your wrists every time you hear it. It's horrific. So I don't listen to it all the time because it is depressing. But they are constantly claiming that we're going to hit the low, we're going to crash, we're going to have hyperinflation. Now, we talked a little bit pre-show. I lived in hyperinflation for 3 years when I lived in Argentina back in the late 70s. It wasn't that much fun. You'd get up in the morning and everything was 30% higher. It's like, what happened? Or 300% higher, literally in days. So, there's a lot of talk that we are going to wind up in hyperinflation. Quantum easing is going to eventually go quantum dead. What do you think is happening with that? Do you think there's any truth to the fact that we will hit inflation? We are printing or creating money out of nowhere right now. What do you think the future brings? I think we're at 30 trillion in debt, if I'm not wrong. We somewhere around there.
Yeah, I'm much less worried about inflation than I am still worried about the opposite of that, which is unemployment and stagnation. This morning, every Thursday, the Labor Department publishes new claims for unemployment, and we hit a high this morning, almost 1 million new claims after we've been averaging about 800,000.
Wow.
Now, I share some experiences with you, Rick. We've talked about this before. You lived in Argentina. I lived in Siberia in the 90s when the inflation rate was about 100% a month. I visited in 2001 Romania before it recalibrated its currency and before it joined the EU. And back then you got, I think it was 25,000 Romanian lei to the dollar. So you were always paying for things. And I was a millionaire all of a sudden. I went from being a poor professor to being a millionaire as soon as I crossed the border and changed my euros, because I was teaching in Austria at the time. Changed my euros into Romanian lei, and it's a dangerous phenomenon and something we should always be concerned about. Although in the Russian case in the 90s, they actually were. It was classic kind of old style inflation of the kind you get when you study German history in the 20s, when the Reichsmark was at 40 billion to the loaf of bread and so forth, and they were printing money and printing and printing. The problem with that is once you print it and put it in circulation, it's there. The difference today in the modern monetary policy of the Federal Reserve, the ECB, the Bank of England, they're not really printing anything anymore. It's electronic, and it's not really money in the sense of something in your and my. This is, again, I'm too old for this, Rick, but we used to talk about money in the pocket. Well, I still have money in the pocket, but it's what the Fed has been doing, and also the ECB and the Bank of Japan and so forth, has been expanding the reserves of the banking system, but it does that electronically, and just as it can increase that digital reserve base, it can reduce it. So unlike the Russians, who can't take the paper back because it's already out in circulation, the electronic monetary base creation that the Fed has been doing can be reversed in a heartbeat. So I think obviously the Fed is aware that there is some risk of inflation given the extraordinary stimulus packages that have been passed in the last several months. And I suspect, my prediction for businesses out there is that there will be a new stimulus package passed within the first 100 days of the Biden administration, and necessarily so, I might add. And so there is going to be a little bit of pressure, but the consumer price index for December just came out, and the inflation rate for the last 12 months in the U.S. is 1.4%, which is actually below the Fed's target of 2%. So this is a long-winded professor answer, and I'll shut up so Susan can talk in a minute. But I don't think the relevant analogy is Argentina or Russia in the 90s or Germany in the 30s. I think the relevant analysis is Japan in the 80s and the 90s, when they were stuck in stagnation and deflation. And in fact, they still are stuck in deflation, even though the Bank of Japan was creating this electronic monetary base in large amounts. So I think right now, if you were a rational business person, you'd be worried about overproduction and falling prices, at least in the immediate quarter one and quarter two of 2021, before you'd be worrying about any price increases.
Well, I'm going to jump in here because I think there's a little bit of a wrinkle here that differentiates us a great deal from, say, the Weimar Republic or Argentina or any of those. If you think about the reason for the inflation before, it was because of the devaluation of their currency and also overproducing. But one thing I think is a wrinkle here in the deflationary force is the low demand for commodities. So we're having, particularly oil and gas. So when you think about how right now, this morning, the price of oil was $53 a barrel, which is a lot more than it was. Price of natural gas is going up. And the reasons for that are, you might think, oh, it's because there's more demand, but it isn't really. It's because the companies are not producing as much. And so what I think what we're seeing is such a plunge of demand because of people not traveling and not having the international commerce. And until we can do that, I think any kind of recovery is going to be very difficult.
And actually, Susan, to go on your point, if you dive deeply into the consumer price index numbers, which is the sign that I'm a nerdy economist because I love to look at the minute details of the CPI. We have had deflation in things like, as Susan said, commodities, but also in terms of transportation services. So because people aren't traveling and there's not business travel and there's not tourist travel. And in fact, the only commodity for which there was a large increase in the latest consumer price index was peanut butter. Right?
Interesting. Peanut butter.
Yeah.
If you think about it, it makes sense because in a pandemic, maybe you can't go to the grocery store or you're afraid of a lockdown. One of the shelf stable, if you will, commodities that's beneficial and tasty, right, is peanut butter. And so it went up in, like I said, the overall consumer price index went up by 1.4%. Peanut butter prices went up by 11% over the last 12 months. So, yeah. It always reminds me of my graduate macroeconomics professor at Oklahoma, Professor Chong Lu, and he was talking about why investing in or buying gold in advance of a real panic is not worth anything. He said, if the economy falls apart, if society falls apart, you really don't want gold because you can't do anything with it. He said, what you really want is peanut butter. And I have a couple of jars of Skippy in my closet or in my pantry at all times.
I knew you were a Skippy guy. That's why I like you.
Crunchy. Yeah.
Crunchy. Well, that's a really good point, and I think that leads to another issue. What we are seeing too is a disruption, tremendous disruption in food trade, commodities trade. A lot of U.S. surplus was purchased by the Department of Agriculture and then sent to Africa as part of like USAID or food aid, which is actually a subsidy to the farmers, but it had a way of stimulating the economy. You take that out, not only do you have problems with the farmers, you also have apparently, and I don't know what you guys see, but a lot of precarious situations in like food security in Africa.
Now, that being said, I heard that there was some food issues in China as well. Ed, how do you see the Chinese economy right now? Because with us not buying a lot, Europe isn't buying a heck of a lot. Where are they making their money?
Yeah, good question. Fortunately for the Chinese, they have enough of an internal demand that's to some extent supporting their economies. And I was watching a podcast or a webinar a couple of days ago, and one of the experts, Gordon Hanson from the Kennedy School at Harvard, said that the worrying about China in the U.S. as a place that's going to displace American manufacturing that's gone. I said the China shock is 10 years past.
Mm-hmm.
That China is turning from an exporter to the rest of the world to the major market. There was an article in the Financial Times today about Tesla selling 21,000 cars in China in December, and that's now their second market after the U.S. So there are more than a billion Chinese, and a lot of them are still relatively poor. But you only need 30 or 40% of a billion people to get an economy that's the size of the U.S. in terms of purchasing power and so forth. I think, Rick, that the danger in China is not economic. I think the danger in China is still political. Mm-hmm. That
yep.
Not just Hong Kong, but this whole brouhaha with Jack Ma and his disappearance.
Yeah, 2 months ago. Yep.
Yeah, exactly.
Relocation.
And
well, a lot of people don't understand. Well, a lot of people really don't understand that in an average dictatorship, whether it's communist, fascist, whatever kind of ism it is, you can almost say anything you want in that country except something political.
Right.
And Jack Ma criticized the Chi-Com party, and in a short time he was disappeared.
Financial.
Yeah, yes, and he was one of the richest men in the world at the time.
Yeah, Ant Corporation, and he sorry to jump in, I just got so excited, but his timing was terrible because he came out right at the time of their publishing their 5-year plan, the 14th 5-year plan. And in that 5-year plan, we talked about this a few times ago in Life Edge, we talked about how they plan to do import substitution, but also grow the economy through domestic consumption, and also by making people dependent on their manufactured products. And coincidentally, a lot of there were chips. They're trying to focus a lot on chips. And right now there's a massive chip shortage. If I were going to invest in something, it might be in chips. What do you think, Ed?
Yeah. One of the things I wanted to say was that because China is, as Rick said, it is a political dictatorship, and that trumps, pun intended, the economic power. So one of the things I tell people that they say, well, we should move most of our portfolio into stocks in China because it's a growing economy and so forth. And they say, I don't think I'm totally opposed to this delisting binge that the Trump administration is on, but I'm not a proponent of putting most of your own personal portfolio, or if you're some kind of a wealth manager, having much exposure to the Chinese economy, because it can go away in a heartbeat. Something that won't happen if you invest in Skippy, right, or Kraft, or Procter and Gamble, or something like that. It's not maybe it's not a boom stock or something that's going to be sexy, but it's much more of a safe and consistent value that you can count on for the next 30 or 40 or 50 years. I wouldn't push anybody or any institution into investing more than, say, 5%, 10% at the most of their money in China. It reminds me, I was reminded of something. Bob Strauss, who was a Texas politician, a Democrat, but who had a position in the Reagan administration in the Treasury Department. And back then, as the Soviet economy was opening up and Russia was about to start this privatization, he said if he had $100,000, he'd invest it in Russia. If he had $1 million, he'd invest $100,000 in Russia. And so if you want to take risks, then you can put money into Chinese stocks and so forth, but I wouldn't put much, and I'd keep most of it in U.S., European assets as the bulk of my wealth management.
Now, Ed, what country do you see right now, or group of countries, as being strong economically moving into the future?
Yeah, that's a really good question. I think let me go about it the exact opposite. What countries would I think were weak? I think the UK. I think Brexit is coming up with all kinds of surprises or semi surprises in terms of how the UK is going to be harmed by that change. I think probably the southern European economies, Italy, Greece, Spain, Portugal, are going to still have lots of trouble for all kinds of reasons. I think the strong economies will be U.S. and Canada, probably Germany. Although I think if you're a business person or an economic analyst, you have to pay close attention to the political situation in Germany, because Chancellor Merkel will be gone in the fall. And right now, in the next couple of weeks, her party, the dominant party in the German political system, the Christian Democratic Union, will be picking their candidate for chancellor. And that person, it will be a guy, because all the candidates are men. So that guy will be the leader of Germany come October of this year. And say what you will about Chancellor Merkel, she's been a pillar of stability, and so the German economy will probably be okay for the next couple of quarters, but I'd be a little reluctant after that. So I'd probably stick with the Northern European economies, the Netherlands, Denmark, Norway. Sweden it's having its repercussions and of its kind of unique and maverick COVID policies, and they're changing them now, as those policies don't seem to have worked very well. But I'm usually not a rabid nationalist or whatever, but I would say in the next year or so, I think that the U.S. economy will be the strongest economy in the next 4 quarters, and probably the Canadian economy. But the Canadian economy has Susan Nash problems. Susan Nash problems mean commodity problems. Lumber, oil, natural gas, and so forth. So the rest of the economy, the financial services sector of the Canadian economy will do well, but it's not nearly as diversified as the U.S. economy. So
I just wonder too.
I'm keeping almost all of my money in U.S. stocks, not really in bonds, because bonds will go down. Because eventually, Rick, you're heading in the right direction. There will be more inflation in the next, say, 2 or 3 years, but more inflation meaning instead of 1.4%, maybe 2.1 or 2.2,
which is almost nothing.
Which is almost nothing, but it'll drive down bond prices and drive up interest rates a little bit. So if you're buying bonds right now, that's not a good thing to do. And so I'm still pretty, to quote the old Merrill Lynch advertisement, I'm still pretty bullish on America.
Sounds good. Well, what about Asia? Do you see anything in Asia?
I'm.
It's a tough one, huh?
Yeah. I don't think so.
Africa, not too good. South America, not too good. No.
South America, I think, has got real problems. And yeah.
But what do you think of Mexico? Because it sounds like Obrador, he's a socialist technically, though I'm not sure how much of a socialist. Sounds like he's doing an okay job for Mexico. I haven't really read the financial numbers on Mexico. I have friends who live there.
I think you're right. I think he's doing an okay job, and what's a socialist? I mean, if you can call Joe Biden a socialist, you can call anybody a socialist. And but I think he's turned out to be much more moderate and middle of the road than maybe his more emotional or romantic supporters hoped. And with the revival in the U.S. economy and the Canadian economy, then that will help the Mexican economy. Of the three NAFTA economies, I still like to use that word because it's easier than the new acronym doesn't. North American, Canadian, Mexican, whatever, it doesn't. The acronym doesn't flow off the tongue like NAFTA. But as Canada and the United States recover, Mexico will recover a bit as well. I'm not sure how you would participate in the revival of Mexican tourism, but I think that's the part of Mexico that will really boom in 2021, because there's all this pent up demand in the United States for travel, and I think the easiest place to travel for a lot of U.S. citizens is Mexico.
Right.
Well, that's one of the only places that will take us. And the other thing too about Mexico, and I think, I don't know what the implications are in the last 6 months, but over the last 18 months or 24 months, with the restrictions with China, then China said, okay, well, we'll just have a lot of relationships with Mexico. And we'll set up basically transshipment or partial manufacturing in Mexico, so the exports Mexican, not Chinese. So that trade war kind of helped Mexico.
And they actually have a pretty good workforce. They are hardworking.
Very good.
They have a large and very substantial automobile industry and manufacturing capability as well. And Susan's right. I think the U.S. trade war, the only losers in the U.S.-China trade wars are the U.S. and China. That the rest of Southeast Asia has helped a little bit. Mexico has been helped a little bit. Unfortunately, I don't think most of the rest of the world is going to rebound as very fast or significantly to make any of those a big success story.
If you had to look at a career today, what would you recommend that young people do as far as careers where there's potential jobs for the future?
Right. I think any combination of information technology, financial technology, and financial technology meaning everything from accounting to finance to economics that deals with data analysis. I think those are the key thing, and probably for a longer term, some kind of healthcare management, right? Not healthcare in the sense of actually doing doctor or nurse stuff, but one of the things that will have to change in the U.S. economy, but I don't know how, but it will, is the way we deliver and pay for healthcare. Because as we've talked about before, the United States has the most expensive and one of the least efficient healthcare systems in the world, and we can't spend any more money on healthcare, but we do need to reorganize and restructure healthcare, and that will involve management more than it will involve medicine or treatment. It'll involve management information systems. It will involve human resource management. It will involve finance. It will involve communications, information technology. So those are the careers I would go in. And one more thing, some kind of environmental policy, management of energy. And again, maybe not engineering in terms of how do you get wind into electricity, but how do you charge for power, and how do you pay for it, and how do you produce it? Right?
Absolutely. I'm with you on that one too. And on the community level as well as corporate level.
Oh yeah, exactly. Right. And community in terms of healthcare as well, right?
Mm-hmm.
How do you manage hospital clinics, right? I think one of the things that's going to come out of the pandemic is that we need to do a much better job of public health care and community-based healthcare delivery.
Yep.
Mm-hmm.
Well, Ed, this has been a great talk. Really, really useful for people. And we are out of time. It goes too fast.
Yeah, it does.
But, you know, Ed, again, we'd love to have you back on, as always. You're always refreshing and great to see you. And for all you folks watching, we hope you enjoyed the show. This was streaming live on LinkedIn and Facebook. We will upload also the video to YouTube later on. And we will have information below if you want to get a hold of Dr. Ed. Feel free to. He still is active teaching. And I guess when traveling comes back, he loves to take students to different countries and really learn about their economies, their culture, and everything else. You know, like I always said, he's the kind of professor we wish we had when we were in school. But yeah, there aren't that many.
And actually,
of them.
my next trip, Rick, is one of those countries I should have mentioned. I'm taking students, hopefully in the fall, to Ireland and Scotland. And the Irish economy looks like it's set to do well because they are in finance and information and logistics and management and so forth.
So that should be a great trip. Not to mention, you'll see your Scottish roots, you know, where you can claim your
exactly.
highness.
I can send in my resume, or I can deliver my resume in person.
That's right.
For the new constitutional monarchy. Yes.
That's right. And we'll vote for you. Anyway, we appreciate you coming on. And Susan, as always, a great pleasure to see you. And for all you folks watching, thank you much. And we hope to see you next week. Have a good one, everyone. Thanks. Bye-bye.
Bye, Rick. Bye, Susan.
Bye.
Bye.